Hi, everyone. This is Christine Kopr, Vice President of Sales at Sotheby's Realty in Vancouver, Canada. Thank you so much for joining me for my February market update. Our stats come out in the beginning of March because we need to wrap up the month of February. And this month's headlines are listings are inching up, sales remain steady, as well as prices. The market is still hot. I was in a multiple offer situation tonight, some crazier than others, and actually some not at all. It's been an interesting little shift in the market, and it's to be expected as well as welcome so that we can maybe come off this feverish pace. Now, with respect to how hot is the market, when you're boiling at a temperature of 108 degrees and you come down to 103, it's a little bit of a cool off, but nowhere near what you want it to be at a steady eddy market that's good for everybody. However, we are where we are. It's been an incredible couple of years in this real estate market, and it continues to move on. So let's get right to it. I'm going to walk you through my favorite graph. As all of you know, every month I go through this chart because it gives us a really great understanding of what's happening in the marketplace. So currently we have sales 3,424 sales in the month of February. That's down 8% year over year and up 50% month over month. So a nice strong sales coming out of January. January traditionally can be a little bit slower coming out of Christmas and New Year's. However, it was a strong market, and so is February. This month's sales are 27% higher than the 10-year average. Now, new listings, this is one we're starting to track because it's the inventory that has been a massive underlying influence on our market condition. I would have to say it's probably the number one driver of our market right now, with other influencers that are having an impact too, but this being the main cause. So new listings, we're going to keep an eye on it. 5,471 new listings in the month of February. That's up 8.5% year over year. So this time last year, we didn't get as many, however, not by much. And we're up 31% year over year. So let's take a look how this fares back to February, because well, we're comparing to last year when the market was incredibly strong. We had significant price gains. This was the peak of the market last year. And you can see we did about the same amount of sales, had the same amount of new listings, but then you could see in March, we hit 82, 87 in terms of new listings coming on the market, and our inventory levels were sitting around 83 to 9,100. Well, today, we're only sitting at 6,742 homes available for sale on the real estate board of Greater Vancouver. Now, we are about mid-March right now, so I did jump on to see where we're at, and sure enough, we have felt it in the last couple of weeks. The listings are starting to come on. This is a traditional spring market. This is when most homes come on the market and most sales occur because there's more inventory to choose from. So this is a welcome part of the market, and we hope we get the listings that we need to satisfy everybody and bring this market down to a little bit more a normal pace. So 6,742 active listings. That's down 19% year over year. Remember, we were up in the 75 to 8,300 range last year, and it's up 19% month over month. So we're starting to see a little bit of inventory. Months of inventory. This is my favorite indicator. This gives us an idea of supply and demand and what's happening in the marketplace. 4 months and below of inventory is considered a seller's market. One more time, 4 months and below is considered a seller's market. 6 months of inventory and above is a buyer's market. And that's simply because when you're 4 months and below, there's just not enough inventory for the current market demand. And when you have 6 months of inventory or more, you have more inventory than you need for the demand, creating downward pressure on prices. And of course, when you don't have enough inventory, prices go up, just like the price of oil. There's concern over a shortage, the price goes up. Supply and demand, just like our housing market. So months of inventory are steady at 2 months of inventory. Now, if you want to take a look at what we did last year in 2021, you can see we were in seller's market territory for the entire year, going all the way back to when we actually COVID lockdown, and we had this blip in the market. No one knew what was going on, and inventory jumped up, but very quickly it dissipated and got down into that 4 months and below inventory. And you can see the steady price gains ever since. So we are still in a very undersupplied market. It is driving prices upwards, and it is reflected in this month's benchmark rate. We're sitting at 1.313 for your benchmark home in Vancouver. This is absolutely incredible. That is up 4.6% month over month. That's almost a 5% increase month over month in your benchmark sale price. It's up 21% year over year. It's been an incredible year in real estate on all fronts. When looking at the detached market and breaking it down into all the different, the detached, attached, and condo market, we're just going to quickly run down through what's happening here in terms of sales to listings ratio. That's another indicator of what's going on in the marketplace. Sales to listings ratio is how many listings are selling of the available listings. So 22% and above is considered a seller's market. 12% and below is considered a buyer's market. You can see here's our new listings here going from January to February. And for all property types in terms of sales ratio, we're sitting at 51%. 51% of all homes are selling right now. 49% are not. So don't think that all homes sell. That's something to keep in mind. But 51%, this is a strong seller's market. Detached homes sitting at 35, up from 28. Townhomes at 64%, up from 52 in January. And 62% of all condos are selling. That's up from 50% last month. Now, when we take a look at your benchmark prices, it is now $2,044,000. It's going to get to the $244 million soon, but $2,044,000 is your benchmark detached price to purchase a home in the Real Estate Board of Greater Vancouver. We have finally crossed the $2 million mark. And it's true, even in the 1.8 million range, it's really hard to find anything that's livable if you're looking in Vancouver East. Now, this is up from 1.95 last month, and sales are up from 62. We did 110 sales here in February. So very, very strong market. Really, it feels like prices are up almost 10% month over, like since December, which is basically what's being reflected in these numbers if we go back that far. Townhomes, your benchmark price is now $1,090,000, so almost $1.1 million for a townhouse. That's up from $1,029,000, and you can see your sales increase month over month. And our apartments/condos are now, your benchmark is sitting at 808, up from 775,000 the month before. And our sales jumped up as well from 1,300 up to 18 and a half or 1,800 sales. So it's been a very strong market. We're going to continue to look forward to seeing what happens here, because there are some factors that can impact the market. Couple of things, of course, we've got rising interest rates. Rates are up about 1% or so, or just under, for a fixed term rate from about a year ago. Your variable interest rates just went up by a 1/4 point last month. We are looking to the next Bank of Canada meeting to see if we're going to have another interest rate increase. That's coming up. We believe that is going to be the case, especially if the US Federal Reserve increases their rates. It's hard for Canada to increase the rates without the US doing the same because of the dollar impact. We are an export nation, so that's important to us. Of course, there's some consumer confidence, things like the Russia-Ukraine situation, which is very unfortunate, and our hearts go out to all of those people that are impacted by that horrific situation. Inflation is the other factor as well. We have inflation through the roof. The US inflation rate is over 7%. Canada's is over 5%. And of course, the government's tool to calm down inflation is interest rates. So inflation is up there. Oil has been up there. That's been a big topic lately. So we're going to see what happens in the coming months. Hopefully we're going to get some more inventory. I mean, obviously we're going to be keeping an eye out for, are we going to have a flood of inventory in the marketplace? To be seen. Hopefully we're going to see the natural sales cycle of the season with more homes coming on the market in the spring with this continued demand. And even with interest rates going up, they're still amazingly historically low in perspective and well below inflation. If you are thinking about selling or buying in this marketplace, it is incredibly important to speak with a professional like myself to help guide you through these sometimes shifting situations. Some people think when it comes to selling a home, it's as easy as throwing it up on the MLS, and that is totally not the case. You need to have a plan. You need to understand how you're going to buy and sell if that's the situation. And there are way more important factors like how to not get sued when selling your home. So make sure you speak to a mortgage professional, and a real estate professional like myself to get the advice and get a team to help you navigate these markets, because it can also turn out to be the most rewarding transaction of your life. So we look forward to hearing from you. I'm Christine Kopr with Sotheby's Realty, and I look forward to connecting with you next month.